Good afternoon. Ken Jolly from BIS Commodities here in Cedar Rapids, looking at the commodity trade for the week of August 21st. Looking at the grain market this week, December corn closed up 1.5 pennies. Wheat closed down 7.5 cents. November beans down 26.25 cents. The week was pretty much dominated by favorable weather across much of the Central Plains here again, plus the overall slow demand picture put us in kind of a sideways to weaker tone here this week. As far as any fundamental news, we looked at the Pro Farmer report as they took their tour this week. Came out this afternoon with 164.8 on their corn estimate, which is compares to 168.8 with the USDA's numbers back on August 12th. Bean estimate was at 46.5, just slightly under the USDA's August report at 46.9. So basically, what the tour found was near record or record yields in the Western Corn Belt that many of us have been discussing here for probably the past 30 to 45 days. They showed Iowa a touch over 180 for a corn average, showed Minnesota as a potential whopping record of just a touch over 190 bushel per acre. So it does show that we are in a situation right now, if we can bring this crop home, that the Western Corn Belt does have the potential to help out alleviate some of the problem that has been established in the Eastern Corn Belt earlier this spring and summer with the excess rains and the unplanted acres in parts of the Indiana, Ohio area, plus in the Missouri area. So we'll have to move forward and see what type of survey we come up with here in September, see if we get any more possible prevent plant acres, but the crop is moving along rather quickly towards maturity. So other news that really highlighted the week and dominated the trade more here on Friday, is this world global equity sell-off that we're seeing. This started in China here a few weeks ago. The Chinese stock market now is down about 11.5% from its high. The U.S. market, which is seeing a major sell-off here today, is now about 9% off its 52-week high. So we saw a lot of selling today in the commodity trade. Crude oil posted a number just slightly below $40 a barrel. Gasoline futures dipped below 150 on the nearby futures. It pushed the grain markets down. It pushed the livestock markets down sharply. Now the dollar was down hard today. This is probably more due to just the overall macro sell-off than it was anything else. Now it is interesting to look at a dollar chart here, and typically a weaker dollar means some commodity buying, which we didn't see today. But the chart shows us the dollar is now back to values that were posted back in July. So this is something to kind of keep our eye on as we move forward. It's probably not a precursor to see a step up demand come at us immediately, but maybe it does help us down the road become a little more competitive, as the supplies, particularly in South America, do run out towards the end of their marketing here. The Chinese have been major buyers of Brazilian beans here yet this fall. We do see them in our market from time to time, but with their stock market issues, with their letter of credit issues, they've been more of a buyer in need than a buyer that took a big position like we've seen the last few years. So this will play into our markets as we go towards harvest, I'm sure, along with what the actual yields be when the combines run across the field. But I think as we probably move forward into next week, we're going to have to take a hard look at what these equity markets do over the weekend, particularly the Asian markets and the Chinese markets, to see if there's any continued sell-off with those coming into our Sunday night issue. So livestock side of things here, we did have the cattle on feed report this afternoon. Trade was looking for on feed at 102.7, came in at 103. Placements looking at 101, came in at 99. Marketing at 97, came in at 97. Overall, it could be viewed as just a touch bearish, but again, directional trade Monday will be more based off what the equity trade does over the weekend, and see if there's any news out as far as government intervention in the Chinese markets. See if there's any statements over the weekend from the political people here in our country, or even the feds, to see if they want to make a statement as far as the upcoming possible rise in interest rates that has been discussed here in the month of September. So I think the general commodity trade going into next week will probably be more about money flow than it is fundamentals at this particular time. So with that, have yourself a great weekend.